Hello intelligent investors, this is Victor here. In my last C Limited stock analysis video I posted 8 months ago, I estimated C Limited stock's fair intrinsic value to be around $201 per share. The stock did increase a lot afterward, but recently the stock dropped as much as 44% from the recent peak after the company released its Q3 earnings. Many investors want to know, is C Limited stock undervalued now, and will C Limited still become a great multi-bagger stock over the next 5 years? I will answer these questions by covering these topics in this video. First, why C Limited stock dropped a lot recently? Second, C Limited's 3 most important businesses and their long-term prospects. Third, C Limited's 3 biggest risks you must know. Fourth, C Limited stock valuation. And fifth, will I buy more C Limited stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Take a look, let's start. C Limited is one of the best performing growth stocks in the past 5 years. The stock did increase as much as 1,265% in the past 5 years, but it dropped as much as 44% from the recent peak, right after the company released its Q3 earnings. So why did C Limited stock drop so much recently? There are several reasons. The first main reason is that C Limited reported a much wider loss than many analysts had expected in Q3, even though C Limited's revenue did beat analysts' expectations. For example, in the recent Q3 quarter, C Limited's total GAAP revenue was $2.7 billion, up 121.8% year over year. Its total adjusted EBITDA was negative $165.5 million compared to positive $120.4 million in the same quarter of last year. This is a wider loss than many analysts had expected. The second main reason is that C Limited's digital entertainment game publishing business revenue growth seems to have slowed down a lot in the latest Q3 quarter. I believe this is the biggest reason the stock has dropped as much as 44% from the recent peak right after the company released its Q3 earnings. The third reason is that interest rates are expected to increase going forward in many countries around the world to fight inflation. When interest rates increase, growth stocks that do not have positive earnings and consistent cash flows yet are always impacted the most. When interest rates increase, C Limited stock valuation will need to be lower because of the higher cost of capital. Let's talk about C Limited's 3 most important businesses and their long-term growth prospects. C Limited is the largest e-commerce company in Southeast Asia. It has 3 major businesses: digital entertainment business known as Garena, e-commerce business known as Shopee, and digital financial services business known as C-Money. Digital entertainment game publishing is C Limited's most important business because this is the only business that has positive operating income compared with e-commerce and digital financial services. If you look at the most recent Q3 financials here, you can see C Limited's digital entertainment is the only business that had a positive operating income of $611.7 million, while C Limited's e-commerce and digital financial services had large operating losses. C Limited's digital entertainment business operating income was not enough to offset all the other operating losses. C Limited's digital entertainment game publishing business, known as Garena, only has 5 major games: Free Fire, Arena of Valor, Call of Duty Mobile, Speed Drifters, and League of Legends. Most of Garena's games are licensed games from third-party developers. C Limited earns a much smaller gross margin from third-party licensed games. Free Fire is the most popular battle royale game in Southeast Asia. It contributes the most revenues and gross margin to C Limited every quarter. As of Q3, Garena had 729 million quarterly active users and 93.2 million quarterly paying users. Here is the important part you want to know. If you look at this here, you can see Garena's quarterly active users and quarterly paying users growth have slowed down significantly compared with the previous quarter. This suggests Garena's self-developed Free Fire Battle Royale game is no longer growing as fast as before. This is one of the main reasons Sea Limited stock dropped as much as 44% from the recent peak after the company released its Q3 earnings. In my opinion, it's very hard to predict whether Garena's self-developed Free Fire Battle Royale game will still be very successful over the next 5 years. Free Fire has several major competing Battle Royale games including PUBG Mobile, Fortnite, and Apex Legends. In my opinion, I believe Garena will likely publish more self-developed games going forward to grow its active user base instead of relying on one self-developed game, Free Fire. Garena also has the option of publishing more third-party licensed games from other developers and game studios, but the downside is that third-party games' gross margins are much lower than Garena's self-developed game Free Fire. I believe Sea Limited's digital entertainment revenue growth will be much lower going forward because its most important self-developed game Free Fire seems to be very mature already. Most of Sea Limited's revenue growth should be coming from its e-commerce Shopee business going forward. Sea Limited's second most important business is its e-commerce Shopee business. Shopee is the largest e-commerce company in Southeast Asia and has the largest market share in Southeast Asia. According to this article, Shopee has the most visitors per month in Southeast Asia, followed by Tokopedia and Lazada. Shopee mainly operates in all these countries in Southeast Asia, in Taiwan and in Brazil. In recent years, Shopee has expanded to other countries in Latin America to compete with Mercado Libre. Shopee is starting to expand to Europe, but is still in the very early growth stage. According to this article here, Shopee provides sellers with its own supply and logistics solutions and language-specific customer service. Another unique feature that allows Shopee to differentiate itself an escrow service called Shopee Guarantee that provides payment security for both sellers and buyers. Shopee earns revenues mainly by offering sellers paid advertising services, charging transaction-based fees, and charging for certain value-added services. Management said this explaining Shopee's global expansion strategy. In the recent months, we launched Shopee in Poland, France, Spain, and India. From time to time, we may test the waters in new markets where we believe there may be an opportunity to use our experience in highly diverse environment to reach underserved buyers and sellers. On one hand, our core focus remains managing our efficient and sustainable growth in Southeast Asia, Taiwan, and Brazil, where we have established and are continuing to grow our strong presence serving local sellers and buyers. According to the most recent Q3 earnings, Sea Limited's e-commerce GAAP revenue was $1.5 billion, up 134.4 billion year-on-year. Gross orders were 1.7 billion, an increase of 123.2% year-on-year. This represents 9 consecutive quarters of triple-digit year-on-year order growth. Gross merchandise value GMV was 16.8 billion, an increase of 80.6% year-on-year. Here's the important part you want to know. Adjusted EBITDA was negative 683.8 million compared to negative 301.6 million for the third quarter of 2020. Adjusted EBITDA loss per order was 41 cents, in line with that for the third quarter of 2020. In my opinion, I believe Shopee will be the largest revenue driver for Sea Limited over the next 5 to 10 years, as Shopee continues to expand in Southeast Asia, Latin America, and Europe. Shopee is still in the very early growth stage in Southeast Asia and Latin America. Shopee still has a triple-digit revenue growth rate as shown in the most recent Q3 quarter, but Shopee is still losing a lot of money every quarter. For example, the adjusted EBITDA loss per order was 41 cents in the recent Q3 quarter. This means Shopee is losing around 41 cents for every item sold on its e-commerce platform. Shopee is using a loss leader strategy to attract more customers and to gain more market shares in new markets. In my opinion, this loss leader strategy should not be sustainable. It should only work in the short term for Shopee to gain more market shares. Going forward, Sea Limited will need to issue more shares, which will dilute existing shareholders' ownership, or issue more debts, or continue to rely on digital entertainment's operating income to offset Shopee's large loss every quarter. Sea Limited's third most important business is its digital financial services fintech business called C-Money. C-Money is one of the leading digital payment services and financial services providers in Southeast Asia. C-Money offers payment services such as mobile wallets for online and offline purchase, as well as transferring money, payment processing, consumer cash loans, buy now pay later for consumers, and merchant short-term loans. C-Money is in 7 markets across Southeast Asia and Taiwan. C-Money earns revenues mainly by charging commissions to third-party merchants with respect to our mobile wallet services and by earning interest from borrowers with respect to our consumer credit business. Similar to Shopee, C-Money is still in the very early growth stage. It's not a profitable business yet. For example, in the most recent Q3 quarter, C-Money's total payment volume was up 111% year over year, and its quarterly paying users for mobile wallet was up 120% year over year. If you look at the financials here, you can see digital financial services or C-Money had the least revenue compared to digital entertainment and e-commerce. You can also see C-Money is not a profitable business yet. I cannot predict when C-Money will become a profitable business. In the short term, I believe the 2 largest revenue drivers will still be C-Limited's digital entertainment game publishing business and its Shopee e-commerce business. Let's talk about C-Limited's 3 biggest risks. I believe C-Limited's biggest risk is that its digital entertainment's quarterly active users have slowed down a lot in the most recent quarter. Again, if you look at this here, you can see quarterly active users and quarterly paying users growth only grew slightly compared with the previous quarter. This suggests C-Limited's digital entertainment may not have double-digit revenue growth going forward. This is from the most recent annual report explaining C-Limited's digital entertainment revenue is largely dependent on one game. We substantially depend on a small number of popular games, including our first fully self-developed game, Free Fire, a global popular battle royale type of mobile game, which was launched in December 2017. In 2020, our top 5 games comprising Free Fire and games licensed to us by third-party game developers contributed 95.6% of our digital entertainment revenue, among which Free Fire contributed a significant portion. As the gross margin of self-developed game content tends to be higher than that of content licensed from third parties, any fluctuations in the mix of our revenue generated from self-developed game content and licensed game content may also affect our profitability. I believe C-Limited's second biggest risk is that the company is still losing a lot of money every quarter, mainly because Shopee e-commerce and C-Money businesses are not profitable yet. As of now, Shopee is using a loss leadership strategy, selling products at a loss to gain more market shares and to attract more customers in Southeast Asia, Latin America, and now Europe. C-Money is still in the very early growth stage and is not profitable yet. Digital entertainment business is the only profitable business that has a positive operating income. This means C-Limited will continue relying on its digital entertainment to fund its Shopee e-commerce growth and its C-Money fintech growth. Going forward, C-Limited will need to issue more shares, which will dilute existing shareholders' ownership, and issue more debt to pay for Shopee's international expansion and fund C-Money's growth. The third biggest risk is increasing interest rates, which will affect all growth stocks' valuations going forward. As of now, many central banks around the world are expected to raise their interest rates in order to fight inflation. Raising interest rates means higher borrowing costs and higher cost of capital for C-Limited. Higher cost of capital will lower C-Limited stock valuation going forward. As of Q3, C-Limited had $3.5 billion of long-term debt in the form of convertible notes. The company will likely need to issue more shares and more convertible notes to fund its e-commerce growth and digital financial services growth going forward. To be fair, the company has a fairly healthy balance sheet with enough cash to cover all short-term and long-term debts. For example, in the most recent Q3 quarter, the company had $11.8 billion of cash and short-term investments and $1.42 billion of receivables. This is more than enough to cover the $6.42 billion of total current liabilities, $450 million of operating lease liabilities, and $3.5 billion of long-term debt. Let's talk about C-Limited stock valuation. In my last C-Limited video, I used a simplified discounted cash flow DCF model to estimate C-Limited's fair interest value. I estimated C-Limited stock's intrinsic value to be around $201 per share. C-Limited stock did drop very close to $201 per share recently. In this this video, I will use a comparable price to sales model to estimate C Limited's fair interest value instead of using a DCF model because C Limited does not have consistent positive cash flows yet. If you look at this intrinsic value calculator, you can see C Limited's biggest competitors are Grab Holdings, that's mainly in Southeast Asia, Alibaba, that's mainly in China, and Mercado Libre, that's mainly in South America. At the time of making this video, C Limited's current price to sales PS multiple is 13.86. In comparison, Grab Holdings' PS multiple is 36.88. Alibaba is 10.03 and Mercado Libre is 2.55. The average price to sales multiple is 15.83. If we multiply C Limited's most recent trailing 12 months of total revenue, 8.3 billion, by the average price to sales multiple of 15.83, C Limited's fair intrinsic value should be around 131 billion for the entire company, or $236.88 per share. This means C Limited stock is undervalued at the time of making this video. In comparison, Morningstar gave C Limited a fair valuation of $239.55 per share. So will I buy more C Limited stock? Yes, I will likely buy more C Limited shares going forward because I believe it's undervalued now. I believe C Limited's Shopee e-commerce and C Money businesses are still in the very early growth stage. I already have C Limited stock in my portfolio, representing about 1.7% of my main gold stock portfolio here. I will limit C Limited stock to around 2 to 3% of my gold stock portfolio to reduce risk. Based on my estimate, I believe C Limited's fair intrinsic value should be around $236.88 per share. This means I believe C Limited is likely undervalued at the time of making this video. Now, all these estimates are only my opinions and my analysis based on my research. They are not financial advice. Make sure you always do your research and do your extra due diligence first before investing in anything. It's important to always invest in what you know. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we will be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.